Well, definitely the markets are melting up, but there is a lot of fragility in all of these markets. So they will do the stimulus. They're pumping so much money. I mean, I just pulled up the Fed graph yesterday to see, and it just keeps going up and up and up. So they're creating new money, destroying the money that's out there. But, the system is really kind of straining at the seams. I don't know whether or not you saw this, but they just changed the prospectus on SLV, right? So what is that really telling us? Basically, in a nutshell, they're saying that they don't think that they can get enough physical silver, and therefore the price of SLV, the silver ETF, is not going to necessarily reflect the true price of silver. So they're admitting that they can't get enough silver, and yet look at what silver is doing today, right? I think it was up a couple of pennies, but it was down earlier. I mean, it's at like $27, and you can't get your hands on it. And if you go to the US Mint's website, well, we know that they jacked up the price of all their silver products a few months ago, right? So the silver American Eagles right now are $73 per ounce.
Wow.
And they're out of stock. Right? Now, I also pulled up our website to see what we were selling them for. And we too are out of stock, but we're selling them at $39. And what I find really interesting is when you talk to dealers about what's happening in the silver market, and I'll come back to why this is significant for everything else. But when you talk to any of the dealers in the silver markets, we have had a huge run on physical silver. And while we're still, some of us, not everybody, but we can still short it, in other words, sell silver that our wholesalers don't have in their possession, that's only because they're confident that they can get it, but you've got delayed delivery. So it's absolutely ridiculous. And when you think about really what happened once the Reddit revolution or Wall Street Bets said, now that we did that to GameStop, let's do that to SLV. And what happened? You had all of the banks come out and say how impossible that was, how impossible it was. Primarily because you have the Bank for International Settlements, the BIZ, and the IMF, and all the powerful backers that can create as much paper silver as they want to squash anybody that's looking for the spot markets to tell the truth. And that's why, you've got silver at like $27 an ounce when you can't flip and get your hands on any, right? So all of that is a really strong indication to me that, this silver piece could absolutely break the markets. And the markets breaking could be much closer than anybody realizes. And that takes us back to that insanity piece with the stock markets. Bitcoin went over 50 grand today. Right, okay. Because that's where they want us to go. They want us to feel comfortable in cryptos, in digital, like we don't need anything physical except we're physical. We need a physical shelter. We need physical food. We need physical water, right? But we're just going to live everywhere in the digital. And really, what I'm seeing is a breakdown of the system, even though the markets are melting up, and especially because actually the markets are melting up. That's what's happening. Well, number one, a great and easy recent example is what's happening in Venezuela. Because since 2012 through 2018, they had the best performing stock market on the planet. But their currency was also in hyperinflation. And so what the government and the central bankers are really counting on is that nominal confusion. ooh, the stock market, hey, my stock went up 85%. Isn't that fabulous? But not really. It's really because of all of the excess fiat money that they are injecting into the system for free. Although now, I think that the Fed is going to quash the yields rising, but we're at 1.28 on the 10-year Treasury, and 1.5 is the typical yield for dividend yielding stocks, right? So when the Treasury yield hits that 1.5, some think that's a tipping point, but just for a correction, not for a stock market implosion. And I probably do actually agree with that, because what's going to happen is the Fed will just keep those presses going and just to the moon on a Lorna Doone, but $1 trillion times zero is zero. So if the stock market's worth $1 trillion, but the dollar has no value, $1 trillion times zero is zero. Absolutely, but let me give you one more piece in what you talked about, because this is a consumer-driven economy. And so all of those millions of people that are out of work are having trouble consuming. So bring in that universal basic income, not just this one-time $600 check or $1,500 check or $3,000, but a consistent monthly deposit into your FedNow account with digital dollars. And people go, look, there's a free lunch, except there's really no such thing as a free lunch. And so 100%, Jake, that is what we're experiencing in a rather pervasive way, is a complete market melt up. But the reality is things are only worth what they're really worth. And when you get to it, without exception, well over 4,800 times, without exception, the intrinsic value of a currency is zero, of a fiat currency. It's zero, because it only has use and demand in one area. And by design, its inflation is baked into it, which creates that nominal confusion. I had a $20 bill 20 years ago. I've got a $20 bill today. Nominally, they're identical. They're both $20 bills. But what that could buy you 20 years ago and what that can buy you today, even a year ago, is vastly different. And then even though they're saying we have no inflation, we have massive amounts of inflation in the goods that we use every day, like, food.